This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Vital signs. Wells Fargo hit by a drop in mortgage lending. What that says about the health of the housing market and one of the nation's largest banks.
Tech Talk. Next week's earnings focus, technology companies. Expectations are high, so will the numbers measure up?
And the doctor is in. Why seeing your physician using a computer for routine visits might be just the beginning. We have the second and final part of our series, Telemedicine. We have all that and more tonight on Nightly Business Report for Friday, July 11th.
Good evening, everyone, and welcome. The first of the major banks to report profits did so today. Wells Fargo, the nation's biggest mortgage lender, overcame a drop in mortgage revenue to report higher quarterly profits of $5.73 billion. That compares with $5.52 billion a year ago. Mortgage originations were way off, down 58% as refinancing basically dried up. But profits were helped by stronger lending overall, securities trading, and lower loan loss reserves. Still, investors pushed down the stock of the nation's most valuable bank. It closed about 0.5% lower as analysts pointed to rising expenses. Dominic Chu has a closer look now behind the Wells Fargo report and what it may suggest about the banks that post earnings next week.
Wells Fargo reported profits that matched and sales that beat analyst expectations. Many investors pay a lot of attention to the earnings report because it gives a glimpse into the health of the real estate market. Wells Fargo is so big that it makes an estimated 1 out of every 6 home loans in America. It made more loans than the previous quarter, but far less than it did the same time last year when interest rates at historically low levels led to a huge wave of mortgage refinancings. Wells Fargo Chief Financial Officer John Shrewsbury thinks Americans aren't as enthusiastic about buying homes as in the past.
What's holding people back from what we might have thought was going to happen in the purchase market is a combination of available supply. It's just a little bit harder to find a home in certain markets, either because people are priced out or because new home development isn't what it was before the crisis. So I think that's, at the margin, one of the items that we're looking at.
That could be one of the headwinds to the bank's business going forward. And Wells Fargo is keeping a close eye to see if it will have an impact.
The purchase market should, frankly, benefit from the fact that affordability is still really good, right? Home prices are up 8% year over year, but they're still moderate compared to where they were at their peak. And rates, while they've moved up a little bit, are still at generational lows. So if long rates move up materially over time, absolutely, that will have an impact of curtailing mortgage origination.
Wells Fargo provides a look at the traditional Main Street side of the banking business. Next week, all eyes turn towards the Wall Street side, with big banks like J.P. Morgan Chase, Citigroup, and Goldman Sachs that have more exposure to investment banking and trading. For Nightly Business Report, I'm Dominic Chu.
A decent finish to a lousy week in the stock market. Stocks bounced back from a string of losing sessions, but the Nasdaq and the S&P still posted their biggest weekly losses in 3 months. The Dow rose 28 points today, the Nasdaq up 19, and the S&P added about 3 points. Now, for the week, the Nasdaq was the biggest decliner, down more than 1.5%, but the Dow and the S&P fell by less than 1%.
Well, we've just talked, Dominic Chu reported, on all the big bank earnings that come out next week, but results will also come in from some top tech companies. The sector has been a strong performer this year, and the results could determine whether the sector can maintain its momentum. Josh Lipton has more.
Expectations are high. Analysts see second quarter earnings up about 7%, which is higher than expectations for the overall S&P 500. And revenue growth is seen growing a solid 5.5%. That's double expectations for the overall market. Wall Street strategists say many tech companies are now among the most strongly managed businesses.
You have the strongest balance sheets of most companies in America, very strong cash flow. Their earnings growth and overall earnings, by the way, since 2000 have become among the most stable earning companies in the S&P 500.
Tech companies now make up about 20% of the S&P 500, so how these companies perform has a big impact on the market. Yahoo kicks off the tech earnings parade next Tuesday. Expectations are for flat growth, and investors are frustrated with that lack of a turnaround at the company. Still, Yahoo bulls say CEO Marissa Mayer's focus on product improvement and user engagement will eventually pay off. And they're looking for Yahoo to benefit from its 23% stake in Alibaba, which will likely go public in August. Intel also reports on Tuesday. A few weeks ago, the chip giant raised estimates because of stronger demand for commercial PCs. The company now sees sales up by about 7% in the second quarter. The stock is now near a 10-year high. But the question for investors is whether any of that PC optimism is spreading to the consumer side of the business. From chips to bids. On Wednesday, investors will hear from eBay, where there have been a lot of fireworks over the last few months. Carl Icahn campaigned to get eBay to separate its PayPal unit until a truce was called between the activist investor and the company. But then David Marcus, the head of that PayPal unit, left for Facebook. eBay stock is firmly in the red this year, but analysts at S&P are telling their clients to buy. They say it's attractively valued and argue PayPal will remain a dominant player in the digital payments market. The busy week is capped off with a big name, Google. Investors will focus on search volume and search pricing, which has been falling. That's because advertisers don't want to spend as much on mobile ads. But bulls point to the company's very strong share in its core search business. Tech is an economically sensitive sector, so any bet on tech is also a bet on the global economy. Josh Lipton, Nightly Business Report, Silicon Valley.
Now, as for retail earnings, those reports will come out in a few weeks from now. But investors got a lot of ominous hints this week that they're not going to be so good. There was a chorus of complaints from one big retailer after another saying sales are weak. And the reason? No, it's not the bad weather like we heard all winter. This time, the blame goes to the consumer. It seems like consumers aren't spending like they used to. And as one CEO put it, they're in a funk.
Hello, welcome to Rent-A-Center.
Rent-A-Center joined the chorus today. Its CEO warned about second quarter earnings because of macroeconomic pressures and financially constrained consumers. The finger pointing began on Tuesday when Container Store Chairman and CEO Kip Tindall said, "We are experiencing a retail funk," an acknowledgement that lower earnings aren't just due to the deep winter freeze anymore. Restaurant chain Bob Evans blames ongoing macroeconomic headwinds, including higher food costs, which of course affect all of us. Walmart's domestic chief, Bill Simon, says it's not getting any better, but it's not getting any worse. He notes that consumers from the middle class and down just don't have the confidence to open their wallets. That's clearly the case at Walmart, where sales have been down 5 quarters in a row and are expected to be relatively flat when the retailer reports next month. It's a sentiment echoed by Family Dollar, which reported profits fell by a third. Its CEO said it's still pretty rough out there and that the low-end consumer has not benefited in this recovery.
So is retail in a funk? Let's turn to Dana Telsey for some answers. She's Chief Research Officer and CEO of her own firm, Telsey Advisory Group, which focuses on the retail industry. Dana, welcome back. Good to have you with us.
Nice to be here. Thank you for having me.
So funk, or are we just sick of all the junk that the stores are selling? The same old junk?
It's a little bit of both. I mean, the weakness in the first quarter that you had carrying over into Q2 as retailers have goods to move. The second half of the year, we should be cleaner on inventory, and consumers just have more choice for cheap. The macro data points you suggested, they're not getting worse, but we need to give the consumers a reason to spend. Innovative product, Michael Kors, Kate Spade, what you saw out of Old Navy, Victoria's Secret, it's very carefully selected where they'll open their wallets.
So when you're going in these stores, what are you seeing? Who's got it right?
when I'm seeing who's got it right, I think Michael Kors has it right. I think Kate Spade has it right. I think we're seeing some of the other companies, for example, like Old Navy, where traffic is, and it's the international apparel retailers. Take a look at H&M, which saw sales rise 23% in the U.S. this past quarter, or Uniqlo. They're giving more competition to our domestic retailers.
What are they doing right specifically, Dana? Is it the product mix? Is it artful merchandising? What is it specifically? And you mentioned a couple of them. A lot of them are sort of higher end. H&M is not. Old Navy is not particularly. But it sounds like you're saying that the higher end retailers are more inclined to get it right.
They are, and it's really a category, the accessories category, doing better. The other category that's working is activewear and athletic. That seems to have taken share from denim and logo. And when you walk in a store, what do you see? You need to look for the signs of traffic, and you need to see less promotional signs. And when I look at H&M or any of the fast fashion retailers, they've got trendy product that's selling at low prices, and it's driving traffic.
Dana, to what extent is it that consumers are trading down? In other words, instead of going to Walmart, maybe they're going to the dollar store, Dollar General. Instead of going to the Container Store, they'll go to Target. Is that a trend that also is impacting why people are saying it's in a funk?
Definitely a bit of that. And I think it's they don't have an unlimited wallet. So are they traveling? Are they going to restaurants, no matter what price restaurants? They can't have everything, so they're choosing more carefully.
You know, one of the stocks you like is VF Corp, which has North Face. I don't know a kid in my town who doesn't have a North Face parka. They're getting it right, aren't they?
They are getting it right, and they have other brands that are getting it right, too. Whether it's not only North Face, but it's also Vans, it's Timberland. They've been very successful at running a conglomerate of product brands.
You've also have JCPenney. You're a fan of JCPenney, which kind of surprises me. What are they doing, right or wrong?
It's better than it was last year, and certainly the comparisons are easy. They've put in the marketing and the promotions in order to drive traffic, and they've put in the brands people are familiar with. Plus the fact that the home business now has a better assortment today, given that it's been reassorted, than it did just a year ago. If people are looking for incremental signs of change, they're getting it.
Dana, thanks very much. You always deliver the retail goods. We appreciate it. Dana Telsey, Telsey Advisory Group.
And still ahead on the program, the one piece of investment advice our market monitor says you need for this market as uncertainty and volatility creep back in. Good news out of Washington. The government is reporting a June budget surplus of $71 billion. So this puts Uncle Sam on course for the lowest annual budget shortfall since the year 2008. Part of the reason, tax receipts are up 8% year over year.
Well, that smaller deficit may come in handy after a group of business economists just cut their growth forecast for the past 3 months. The National Association for Business Economics lowered its second quarter outlook from 3.5% just a month ago to 3% right now. But the group is still optimistic about a rebound from that disastrous first quarter.
Also from Washington, President Obama has enlisted the help of 26 major corporations in a new initiative to get them to pay their suppliers faster. The idea here, the faster those small companies receive the money that they're owed from giants like Apple, FedEx, IBM, AT&T, the quicker they can deliver goods, get even more business, and maybe even hire more workers.
Well, more new workers is part of the reason three of the biggest names in business took a joint stand in blasting Congress to get to work to pass an immigration reform bill. In a New York Times editorial today, investor Warren Buffett, Microsoft founder Bill Gates, and casino magnate Sheldon Adelson cited immigrants' purchasing power, unique abilities, and financial resources as reasons why immigration reform is good for the country.
The shares of some mortgage insurers fell in reaction to proposed regulations, and that's where we begin tonight's Market Focus. The Federal Housing Finance Agency wants to tighten the requirements for private insurers that do businesses with Fannie Mac and Fannie Mae and Freddie Mac, companies like MGIC Investment, Radian Group, and Genworth Financial. The agency says the proposed rule will make sure insurers have enough money on hand to pay claims. Well, investors weren't so pleased with that news. Shares of MGIC fell 9.5%, Radian down 5%, Genworth off by 2.5%. Reynolds American and Lorillard are in merger talks, a move that would combine two of the nation's biggest tobacco companies. Now, there's been a lot of speculation about a combination, but now the cigarette makers are confirming the talks. And they're also in discussions with Britain's Imperial Tobacco about selling some assets. Shares of Reynolds down a fraction to $61.75. Lorillard, though, popped more than 4.5% to $61 and change. Shares of Amazon jumped on news that the online retailer has asked aviation regulators for permission to conduct outdoor drone tests near its Seattle headquarters. The company hopes to deliver packages by drone one day. The stock rose 5.5% to $346.20.
Shares of Fastenal dropped after the company reported earnings that were merely in line with estimates and revenue that was slightly below forecasts. The company, which sells fasteners and other industrial supplies, says it is facing gross margin challenges. The stock fell 4% to $46.15. Whirlpool is buying a majority stake in an Italian rival, Indesit, worth a little over $1 billion. The home appliance maker says the deal will strengthen its European manufacturing operations. Shares of Whirlpool up 1%, 140.76 was the close there.
Tonight's Market Monitor has one important word of advice to investors right now: diversify. He's Bruce McCain, Chief Investment Strategist at KeyCorp's Private Bank. Bruce, we always hear this, diversify, diversify, but you're saying this time it's different and really important. Tell us why.
Well, I think there are just so many conflicting currents in the market. It's just important to have some things that will do well under a variety of outcomes as you look to what the Fed will be doing and what overseas markets are going to be doing, as well as the trends here in the United States.
When you say diversify, how do you think most people should do that optimally? Are you talking about changing the mix of stocks and bonds, changing the mix of large and small caps, international versus domestic? What?
I think having representative proportions that are there in accordance with a good, solid, long-term plan, but certainly small cap as well as large cap and international as well as domestic, and making sure you have a good, solid equity exposure relative to what you need over time.
Bruce, you've given us a couple of stocks that you want to recommend to our viewers, and they're all in different industries, so they are diversified. Let's begin with ConocoPhillips, a COP ticker symbol. Why do you like this, especially since the stock has really had a good run so far this year?
It has had a good run, but one of the things that our analyst likes about that is the fact that he thinks that we will get some revision of multiples and they will pay more for that stock over time as they see that it's better able to grow its reserves. So not only do you have a company that's doing well with exploration and production, but you'll get a higher multiple and you get a higher dividend yield to boot. So you win on several different fronts there.
So let's turn now from the energy field into the healthcare field. McKesson is another of your picks.
Yeah. With McKesson, there we like the fact that not only do you have the increased need for health care with the aging of the baby boomers, but also with the Affordable Care Act. We're going to look not only for increased health care provision, but also cost-effective provision, and a drug provider, wholesaler like McKesson is certainly an important part of the treatment mix there.
And the other one that you're recommending is Disney. The stock is at 86 now. Would you put new money in this now, given also it's had a pretty good run for 2014?
Well, it has, but one of the things about Disney is not only is it a good growth stock with solid franchises with Star Wars and Marvels that give it upside potential in earnings, but it's also a more conservative stock in the sense that when people really become worried about the markets and the trends, Disney's the sort of stock that will attract new money and help to hold up the values. So not only does it provide a diversification into the consumer discretionary, but it's a little bit of a flight to safety quality stock.
Bruce, did anything happen in Cleveland today?
You mean other than the fact that everyone's celebrating LeBron James coming back? No, nothing happened at all.
Are you long the Cavaliers and short the Miami Heat, or what?
Well, we wouldn't short the Heat, but let's just say the prospects for the Cavaliers look much, much better with the acquisition.
A lot better than they did 24 hours ago. I know everybody, people, if you're not in Miami, people are very excited for Cleveland, including my co-anchor who grew up there.
Bruce knows I'm a Clevelander, and not only did you have the LeBron news this week, what a week for Cleveland. The Republicans are going to hold their convention there in 2016. So good things happening to the city that was once called the mistake on the lake, right, Bruce?
Absolutely. We think there's a lot to be discovered here and invite everybody to come see.
Okay. Any disclosures on the 3 stocks that you recommended, Bruce?
No, I don't personally own any of those.
All right. Thanks a lot. Have a great weekend celebrating that LeBron victory. Bruce McCain with Key Private Bank. Tyler?
And as we just mentioned, LeBron James is returning to the Cavaliers. Not just a sports story, but it's a big business story as well. Forbes magazine says that last year the team was worth just over $500 million with attendance at about 84% of capacity. That was then. Now the return of the King means the value of the franchise will immediately increase by as much as $150 million on expectations of sellout crowds, higher prices for luxury suites and premium seating, more team sponsorships, higher TV and radio advertising revenue. That is the LeBron effect. Coming up, the biggest opportunity yet in the game and changing field of telemedicine. Bertha Coombs concludes our series next.
Grain prices tumbled to their lowest levels in years, and that's after the Department of Agriculture raised supply forecasts. About 3/4 of the nation's corn and soybean crops are in good or excellent condition. Ideal weather in the United States is fueling expectations that bumper autumn harvests will expand inventory. And that's why the price of corn and wheat, as you can see there, fell to their lowest prices in nearly 4 years. Soybeans fell to a 4-month low.
Good news for drivers on the East Coast. The Energy Department says its planned gasoline reserves for the Northeast region, it's now in place and ready in case of supply disruptions at the height of this year's Atlantic hurricane season. The 1 million gallon gasoline stockpile was created after 2012 Superstorm Sandy left many East Coast motorists and home generators without fuel for days.
Federal safety regulators are looking under the hood at Ford. They're examining 500,000 cars for a heat shield that can rust, fall out, and cause drivers to lose control of the steering. The investigation by the National Highway Traffic Safety Administration covers Ford's Crown Victorias, Grand Marquis, and Murata models from the years 2004 through 2007.
A little bit of car trouble also at Chrysler, the automaker recalling 650,000 Jeeps and Dodge SUVs in the U.S. to replace the wiring in the vanity mirror lights to prevent a short circuit. You can never do too much for vanity. The recall includes some 2011 through 2014 Jeep Grand Cherokees and Dodge Durangos.
You'll remember that last night we told you about the growing trend in so-called telemedicine, a high-tech and low-cost way for patients to stay in touch with doctors anytime from anywhere. Well, today we take a look at the doctors adapting to this new form of medical care and one of the companies behind it. Bertha Coombs has the story.
Tim Howard never thought he'd leave his practice, but he got fed up with insurance red tape, which left less time for patients.
My heart and soul is as a family practitioner.
The Huntsville, Alabama doctor found a new lease online, practicing with Teladoc.
I really become closer to patients in that moment than having to work through all the administrative in my office.
One up here in Connecticut.
Teladoc CEO says they now have a waiting list of doctors wanting to join, but 5 years ago there were skeptics.
People wondered whether this was real medicine. It really legitimizes and makes people more comfortable that this is a really important part of the delivery system.
Their corporate clients include Home Depot and the retiree plan CalPERS, which have embraced the $40 to $50 flat fee visits for routine care as a cost saver. With 8 million users, Teladoc is a leading player in the industry, but competition is heating up. Insurer WellPoint has launched a rival service. Jason Gorovic welcomes them.
It's really hard to scale. We're going to do over 300,000 remote consultations this year.
And not just for routine care, they're expanding into mental health.
And things like grief counseling, minor depression, anxiety issues that aren't chronic. We're giving patients the ability to schedule multiple interactions with the same caregiver.
The industry's biggest opportunity may be in helping health systems monitor post-op patients and people with chronic medical conditions, especially the elderly. But first, they've got to get state and federal regulators on board.
The big barrier in healthcare, as is often the case, is the payment system. It's very difficult to figure out ways to pay for innovation.
So far, Medicare and Medicaid have been cautious about telemedicine reimbursement, but the issue is heating up in Washington and state capitals, and the American Medical Association has backed the industry on its potential to improve care and cut costs. Analysts say it's now a matter of time. Bertha Coombs, Nightly Business Report.
And to read more about telemedicine and why it's considered a game changer for healthcare, log on to our website, nbr.com.
As the World Cup soccer tournament comes to an end this weekend, it's time for us to wrap up NBR's Ultimate Stock Cup. Over the past month, we pitted rival global brands against one another. You got to vote, and here are the stocks you picked. In Tuesday's challenge, Google beat out Alibaba, and not on penalty kicks. The other winners looking back were PepsiCo over Coke, Apple, Oracle, McDonald's, General Electric, Toyota, and Nike. Those were the winners.
All American
And we'll find out Sunday whether Germany beats...
Who do you think? What are you calling for?
I think Germany looks awfully, awfully good. It's got two of the best players in the world, Muller of Germany and Messi, who is my son's favorite player on Argentina.
And I understand he's a pretty good soccer player.
He's pretty good.
Your son.
Yeah, he's pretty good.
Well, that's it for us. I'm Susie Garup. Have a great weekend, everyone.
And I'm Tyler Matt. I almost forgot who I was there. I'm Tyler Matt. I'm so giddy about LeBron and going back to her hometown. Have a great weekend, everybody. We'll see you Monday.
I'm Susie Garup with a Nightly Business Report news brief. The first of the nation's big banks posted earnings today, and they were strong. Profits at Wells Fargo rose to nearly $6 billion, and that's despite a drop in mortgage revenue as refinancings dried up. A decent finish to a lousy week on Wall Street, with the Nasdaq and the S&P posting their biggest weekly losses in 3 months. The Dow rose 28 points, the Nasdaq up 19, and the S&P added about 3 points. The government's reporting a June budget surplus, putting Uncle Sam on course for the lowest shortfall since 2008. Tobacco giants Reynolds American and Lorillard are in discussions about a merger. And Amazon has asked aviation regulators for permission to test deliveries made by drones near its Seattle headquarters. Be sure to tune into Nightly Business Report right here on your public television station.